You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo. Hey, what's up, Mike Moose? Mike from The Moose on the Loose. I hope you are doing well today. Today I want to take a look back at the past 6 full months. So we're like half year now. And I want to pull out like a few lessons that we can learn from what just happened in 2025. So I have like 4 lessons for you today and then 1 trick to handle what's going to come up. So a lot of uncertainties, all right? So of course, it's not going to end because it's July. Yes, it's going to be a bit smoother maybe during summertime, but we all know investors in general, they kind of get a bit worried when we get into September and October, November. Like those months seems to not have a good reputation on the stock market. So a few crashes started around those months. So maybe it's just this. But anyways, so lesson number 1 is you don't know what you don't know. Over the past 6 months, I've been pressed to talk about tariffs. And then sometimes I had emails like, Mike, what are you talking about? Like you have a completely off topic. Like the topic of the day is the tariffs. Why don't you talk about that? And then it came with the big, beautiful bill, right? So getting a bunch of emails like, Mike, what's going to happen with Section 899? We're going to pay like 50% in taxes in our RSP. I'm freaking out. Should I sell all my US assets? And most of the time I take a lot of time before talking about that because there were a lot of unknown. And the worst part is on top of all the unknown and uncertainties, well, there are a lot of things that we didn't know anyway. So for the tariff, actually the rules keep on changing as of today and changed so many times. If I had to pay you if you had to pay me like $1 every single time I had recorded a tariff podcast talking about the new rules, I mean, I would have made like $100,000 in the past 6 months, right? That would have been crazy, probably more, because there was like something new every single day almost. And still, it's not over yet. So whatever is going to happen in the next couple of months, well, we don't know. So there's not much point here. So the lesson here is not only you don't know what you don't know, but to learn how to let go of all of that uncertainties because there's absolutely nothing you can do. And when we are facing the unknown, the second thing that we start to do besides panicking is actually trying to make up scenarios, right? Oh, if this happens, I'm going to do this or I'm going to do that. And I'm going to manage my portfolio to match the tariffs or avoid them. And then same thing with the big, beautiful bill. And I'm going to take action right away so I'm not going to get caught into the middle. Well, here's the thing. You can write up like 10, 50, 100 different scenarios if you want. And the only thing that will happen is none of them will. None of them. None of them at 100%. I mean, just look what happened with the big, beautiful bill. There were a lot of experts saying, yeah, it's not really well drafted. It's like 1,000-page long. It's probably not going to be approved that way, or it's going to take time. Well, ended up was approved. Probably not the best way, but anyway, it was squeezed on time. It got approved, but another scenario that most people didn't think of, because in Section 899, there was punitive tariffs on a lot of things, not punitive tariffs, but punitive taxes and withholding taxes. But guess what? Mark Carney decided to cancel the tax on digital services, which was another scenario that, I mean, I don't know. I didn't read about that in the media much. I didn't think of that either. So there you go. So now we may skip those punitive withholding taxes altogether. What's going to happen? I still don't know. But the lesson here is all the scenarios that you think will happen won't. And the solution here is actually to focus on what you can control and not just base your own decision on facts instead of trying to time those kind of things and try to get away with a win it sounds like a risky business in my opinion. Anyways, lesson number 3: uncertainties create opportunities, but you have to be fast. I totally missed it. I missed the AI drop. It's been a while that I've told you that I like Broadcom, and this is like a stock that I wish I had in my portfolio. Most AI stocks dropped due to like various combination. A lot of like companies actually all together in April. That was a pretty tough month. Right after the tariffs announcement, the first tariff, like the official tariffs announcement, not the first one. Anyways, you get a point. Anyways, long story short, it was a quick drop. It was a nice opportunity. Didn't last long. On my side, I was fully invested, so I did not feel the urge to sell something to buy Broadcom. And unfortunately, that stock went back up, fully recovered. So that was a good timing to buy some shares. Just lost it. And I feel that this is something that we're going to see more often going on. I mean, we've seen that a lot, like a stock market going down on like bad economic news or whatever, and then quickly recovering, like quicker than what history has shown us. And one of the reality right now is that since 2008, since the financial crisis, there is always a huge chunk of money waiting in money market funds on the sideline. So whenever there's a big drop, and it's a feeling, it's not nothing like I don't have like data to support it. So maybe I'm totally wrong on this, but I just see like 2018 quick bear market, fully recovered in 2019. 2020 pandemic, like V recovery within the same year. 2022 small bear market again due to interest rate, fully recovered in 2023. Now we had Liberation Day. The market went down about 10-15%, and then boom, recovered. Now we're in positive. So it was super quick over the past few times that the market dropped by like 10, 15, 20%. And before that, it used to take more around like 24 months, 18 to 24 months, not just like 12 or even less than 12 in some cases. So anyway, here the lesson is uncertainties create opportunities, but the solution is get your buy list ready and be ready to act fast if you are tracking a stock. I just missed it on Broadcom. It was really tough. The fourth lesson, actually, it's kind of like ironic, but the Canadian stock market is beating the US market so far. Kind of crazy, right? So if you had invested in XIU following the S&P 60, the TSX 60, sorry, like the total return, including dividend, would be 10% as of this morning. So that's kind of crazy, like 10% up. For SPY in US dollars, that would have been 7.3%. So, I mean, good performance, but still 3% behind the Canadian market. But if you were investing in VFV, which is tracking the S&P 500, but you get it into Canadian dollars, well, since the Canadian dollars has gained a bit of strength versus the US dollars, well, now you would be up only 1%. So the big winner for the first 6 months, the Canadian stock market. Would have not believed that. But again, if you're diversified, you don't have to care. I'm roughly like 50-50. So I'm happy when the stock market is up on both sides of the borders. Ideally, when everything is up, which is the case right now. I'm also getting hurt a little bit this year due to weaker US dollar versus Canadian dollar. But that's fine. I mean, it's part of the game. And over the long run, it's not going to affect my portfolio that much. So that's great. So the 4 lessons for 2025 before I get to that trick. The first one, you don't know what you don't know. The second one, the scenario you think will happen will actually won't. Number 3, uncertainties create opportunities, but you have to be fast. And then Canadian stock market beat the US so far, so diversification is key. So the trick, well, I feel that a lot of investors right now are nervous. They have been nervous for a while now. They don't know what's going to happen. They fear a recession. They fear the tariffs, the big bill, and everything else. And I could not really understand because I didn't feel that like level of uncertainties or nervosity or anxiety for me and my portfolio. But then I realized a lot of investors, they don't have a clear strategy. They're trying to invest and follow the winds, and then they go left and then they go right, and then they're trying to figure out a way every single time and be a little bit smarter than the guy next door. I don't know. Like, my trick is just I focus on a simple and clear strategy, and I did not do anything this year. So I just saw my portfolio going up, and that was kind of nice because I didn't have to take action. Everything that happened did not really affected my portfolio that much anyway. So I just had to stay the course, and that's pretty much it. So that's the trick for the next 6 months coming up. There is going to be a lot of more like noise and uncertainties, but if you have a simple strategy, you're going to be good. So take a little bit more time instead of like following the news and figuring out what's going to be the next scenario that will not happen. Focus that time and energy onto your investment strategy, and you're going to be a lot better moving forward. So, all right, Moose, that's enough for today. We're going to talk again tomorrow. And until then, don't forget to stay invested. Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.